Good morning, everyone. Welcome to Windsor Brokers daily live outlook for majors for Wednesday, 12th of October 2011. Yesterday's main focus was at vote of Republic of Slovakia. That was the last one of the Eurobloc to vote for support of the bailout fund that was earlier agreed in July, with the remaining 16 countries already voting and supporting the plan. So yesterday's awaiting kept pressure on the euro, with the result of Slovak Parliament voting no for the extension of the bailout fund to 440 billion euros, putting additional pressure on euro, and basically the single currency further eased overnight. However, the positive sentiment still remains, as the Prime Minister said that on the second round of voting that should occur by the end of this week, with support of the major opposition party, the plan would likely be passed in the Slovak Parliament, and then it will be completed. The voting will be completed in whole Eurobloc, and likely to take further steps in order to extend the fund and fight the current debt crisis. Actually, the markets are still in the sort of positive mode after the Sunday's Franco-German meeting on the highest level between Prime Minister Angela Merkel and the French President Sarkozy, announced taking a strong action in order to shore up the banks, to solve the Greek crisis and increase the improve the current situation in the Eurozone's economy. Basically, the markets most of the instruments reached some important levels that for now capped the gains or losses, depends on which direction they are moving, but the sentiment remains in that direction, and likely we might see again a renewed attempt in the short term towards these levels. We'll see them through later on in the technical part. Just brief look at today's calendar. Already released the German wholesale price index came better than expected. Forecast was minus 0.1%. The release is 0.3%. Batch of data coming from UK in approximately 15 minutes at 8:30 GMT. Claimant count change expected to raise to 24.7 thousand. Average earning index slightly to decrease to 2.7% versus 2.8 previous release. Eurozone, the unemployment rate in UK expected at 8% versus 7.9% the previous month. Later at 9 o'clock, GMT industrial production in Eurozone forecast is negative, minus 0.8 decrease is expected compared to the previous month reading of plus 0.9% growth. And then we have a CB leading index from UK at 9 o'clock also. No forecast, previous release 0.3%. Number of speakers from the FOMC due later today. Fischer, Plosser, and also the meeting minutes of the latest FOMC meeting, which the investors are awaiting for this about the recent Federal Reserve policy meeting, with analysts expected minutes to show most policymakers continue to expect a rebound in growth in the second half of the year compared to the first half, but the risk remains skewed to the downside. From the technical outlook for today, we'll start with the euro. The levels I was mentioning, the euro is actually just under the key short-term barrier at 136.90, 137 zone that already been touched at 136.97 on 10th of October, ahead of corrective easing. Now the recent narrow range of the pullback suggests further corrective trading, as the main support in the near term at 135.25 and 135 zone remains intact for now, and this keeps the short-term positive sentiment in play. We can see that only 23.6% of the entire move from 130-145 has been retraced, and the pair is currently moving in the directionless range, with the focus still on the upside, as for our chart 20 days moving average currently at 135.55 supports the current sentiment. Of course, the break above 137 barrier is a must in order to resume the recovery and continue the correction of the broader downtrend of euro-dollar from latest leg lower from 145.48 29th of August high. We can see also that this is marking 38.2% of the entire down leg retracement, and further upside action would likely look for a test of 137.96 21st of September high, and then 50% Fibonacci retracement at 138.41. Break above daily 20 days moving average keeps the near-term positive tone more supportive, and keeps upside test of 137 barrier favored for now. The similar situation with the cable, as the gains stalled on approach to key short-term barrier at 157.14, the high of 29th of September, with market hitting 156.87, stalling just ahead of it, and undergoing the corrective pullback. From the Fibonacci levels, we can see that the nearly 38.2% has been retraced so far. However, the initial supports at 155.25 and 155.00 remain intact for now, and this keeps the near-term positive tone for out and the scope for a fresh attack at 157 barrier still in play, with the recent break above hourly 20 days moving average keeping hopes of further gains of the cable. However, the hourly studies are weakening and already below their center lines, so this might weaken the near-term structure, while the 4-hour situation is looks more positive at this point, as a break above 20 days moving average that is still pointing higher might see some scope for a further attack, further gains and attack at 157. On the downside, the key support area 155.25, 155.00, below which would sour the near-term tone and likely open way for a stronger reversal and put the test of 157.00 on hold. Also important, in case of a break above, a clear break above 157, this might signal forming of a double bottom with the regain of 157.50, 158 needed to confirm. Dollar yen is in the narrowed, further narrowed to 25 pips range, with 77.25 and 76.25 and 76.75 and 76.50 offering immediate limits up and down. I would say the current studies are flat, suggesting no movements, so we should refer more to the extreme points at 77.00 on the upside and 76.10, break of either side to signal possible establishing of the fresh direction. Until then, the pair remains within very narrow and directionless trading. Dollar Swiss found support yesterday at 90 zone, following the pullback from 93.10 high posted on 6th of October, as a part of the broader uptrend from 70.67, the historical low of dollar Swiss posted on 9th of August. As the gains stalled just ahead of our next target at 93.38 and 94.00, with subsequent pullback losing 92.00, 91.40 as a strong support, and finding for the time being support at 90 zone. The current bounce is so far limited at 91.20, just ahead of 4-hour 20 days descending moving average at 91.30, and the initial resistance at 91.40. That's a previous support, now reverted to resistance, and these obstacles need to be cleared in order to resume the uptrend. Otherwise, further easing and possible revisit down to 90 support zone would be likely. Also important to mention that at the downside, the 20 days daily 20 days moving average is currently offering strong support, and the loss of this 90 handle would signal further easing and correction of the pair, and likely to open a test of the strong support at 89.20, a low of 29th of September. Nothing new in the commodities also, as gold is easing again after yesterday's brief break above the initial resistance at 1680 zone, which is also 38.2 Fibonacci retracement of 1920, 1532 down leg. However, the near-term outlook is still skewed towards the upside and keeps the 1683.84, which is the high of yesterday, still in focus, while the initial support at 1650 zone stays intact. Hourly and 4-hour 20 days moving averages are below the price, supporting at this point, with the near-term studies slightly above their midlines, keeping focus on the upside. We need to see the clear break above 1683 in order to resume a current recovery from 1532, and the open on the upside, the 17 level as strong support ahead of Fibonacci 50% at 1725. On the downside, as I said, immediate support comes at 1650 zone ahead of 1625, while loss of the recent consolidative range bottom at 1590 zone would be risky, and likely open way for a return towards 1532 low of 26th of September. The crude oil, the broader outlook remains bearish as the pair continues to post fresh lower highs, with recent low hit at 74.94 on the 4th of October. The current recovery attempt cleared some important levels at 84.75 and 85, level regaining 86.61 so far ahead of current easing. However, the near-term outlook keeps upside still favored, with the test of main trend line, bear trend line resistance at 86.87, pardon, and now in focus, above which to open way for a stronger recovery, and the likely focus our key short-term barrier at 90.57, above which actually would be signaling a double bottom and triggering a further stronger correction of the crude oil.